Hello and welcome to Explain the Charts, your channel for in-depth technical analysis. Today is October 27th, 2025, and we are looking at USDJPY, which is at a fascinating crossroads ahead of a pivotal week. First, let's cover the news driving the market sentiment. This week is dominated by upcoming interest rate decisions from both the U.S. Federal Reserve and the Bank of Japan. The market is widely expecting the Fed to cut rates by 25 basis points due to softer inflation and a cooling labor market, which would typically be bearish for the U.S. dollar. Conversely, the Bank of Japan is expected to keep its rates on hold, but traders are eagerly awaiting any signal of a potential rate hike in December. A failure by the BOJ to provide a hawkish signal could disappoint investors and significantly weaken the yen. Adding to the mix, Japan's new Prime Minister, Sanae Takaichi, has proposed a massive $92 billion stimulus package. While intended to boost the economy, such a large stimulus is often inflationary, which adds pressure on the BOJ to consider tightening its policy sooner rather than later. Furthermore, optimism is growing around a U.S.-China trade deal, with talks progressing and some officials suggesting a deal is nearly finalized. This has increased global risk appetite, which tends to weaken safe haven currencies like the Japanese yen. Now, let's see how these powerful fundamental forces are reflected in the charts. We're starting with the daily chart to get a broad perspective on the price action. Looking at this daily chart, we can see a dramatic story has unfolded over the past year. After peaking above 160 back in mid-2024, the pair saw a sharp decline, bottoming out in the low 140s in August and September. Since that bottom, however, we have been in a very strong and clear uptrend. This rally has been particularly aggressive since the beginning of October, which coincides with the news of Japan's new political leadership and stimulus talks. Let's zoom in on this recent price action to get a clearer view of the key levels we're dealing with right now. Here in this focused view of the last month, the uptrend is unmistakable. The price surged from around 147 all the way to a high of 153.18 on October 23rd. This brings us to the most critical pattern on the chart right now, a potential double top. Notice how the price hit that high on the 23rd, pulled back, and then, in today's trading, retested that level with a high of 153.21 before pulling back again. This 153.15 to 153.30 area is now a formidable resistance zone. Several news outlets have highlighted this exact pattern, suggesting a pullback is the most likely scenario if this resistance holds. A break below the neckline of this pattern, which some analysts place around the 149 level, would be a very strong bearish signal. For now, the price has pulled back from the highs, so let's switch to the hourly chart to examine the short-term battle between bulls and bears. On the 1-hour chart, we can see the recent price action in much greater detail. Here is the peak from October 24th, just above 153, and here is the subsequent rejection. The price then found some footing and rallied back up over the weekend and into today's session, hitting that slightly higher high we saw on the daily chart before being rejected once more. This confirms the strength of the resistance at the 153.20 to 153.30 area. Currently, the price is consolidating around 152.90 after a retreat. An immediate level of support to watch on this time frame is the recent low around 152.25. A break below this level would signal that sellers are taking control in the short term and could reinforce the double top theory. Conversely, if buyers can push the price back above 153 and hold it there, it would show continued strength. Now, let's quickly look at the 15-minute chart for the most recent price action. On the 15-minute chart, we can see the market is in a holding pattern, moving sideways. This reflects the market's indecision as traders await the major news events from the Fed and BOJ. The price has been making a series of lower highs and higher lows in a very tight range over the last few hours. This indicates uncertainty and often precedes a significant breakout in one direction or the other. Pay close attention to how the price reacts as we approach the key support and resistance levels we've identified. Alright, Let's go back to the daily chart to recap and discuss potential scenarios. To summarize, we are at a critical inflection point for USDJPY. The key resistance level to watch is the double top area between 153.15 and 153.30. On the downside, immediate support is around 152.25, with a more significant support level at the 151.60 Fibonacci level mentioned by analysts, and then the major psychological level of 150. So, what are the potential outcomes? Let's look at a bearish scenario first. If the Fed delivers its expected rate cut and the BOJ signals a future hike, we could see this double top play out. A confirmed break below 152.25 would be the first warning, with a target potentially returning to the 149 to 150 zone. I would place the likelihood of this short-term bearish scenario at around 60%, given the clear resistance pattern. Now for the bullish case. If the BOJ disappoints the market with a very dovish statement, or if the Fed surprises by holding rates, the yen could weaken significantly. In this scenario, a decisive break and close above 153.30 would invalidate the double top. This would open the door for a move towards the next major resistance levels, with some long-term forecasts targeting 154.80 and even as high as 156.97. I see this bullish breakout scenario as having about a 40% probability in the immediate term, as it requires breaking a strong technical resistance pattern. The key thing to watch this week is the central bank commentary that will almost certainly be the catalyst for the next major move. Before we finish, please remember that this is not financial advice. The analysis shared in this video is for informational and educational purposes only. Always conduct your own thorough research and consult with a qualified financial advisor before making any investment decisions. Thank you for watching Explain the Charts.